Hello traders, James Stanley with StoneX and Forex.com. I covered equities in our 2026 forecast, and this is the fourth consecutive year that I've covered equities in our annual forecasts. In each one, I've remained bullish, and I see no reason to change that for this year either. With that said, we're in a different environment. And I did scale that bullishness a bit last year in saying that I wanted to look for a pullback. I even used equities as my top trade idea for 2025, but only after a pullback. And the reason then was very much valuation concerns. What I looked at in the 2025 forecast for equities was a lot of similarity between the AI boom and the tech bubble. A year later, those similarities have only continued to stack up, and I'm perhaps even more convinced that we are in the build of a bubble. But like I talked about then, that doesn't necessarily mean that it has to pop. That doesn't necessarily mean that sitting on shorts, hoping and praying that it does pop is the right way of going about it, because these things can last. They can extend for a while. And as a case in point, I used the Alan Greenspan example. He first coined the term irrational exuberance in December of 1996. At the time, we were still in the early stages of the tech boom bubble. The Nasdaq then went up another 480% before ultimately topping in March of 2000. And then, when it did come down, it didn't get far below, even at its lowest, below that December 1996 level. So even if Alan Greenspan had set up a short position when he first coined the term irrational exuberance, it probably wouldn't have worked out for him. This just highlights the danger of trying to call one of those bubble type events, trying to call a top in those bubble type events. Now, a year after the 2025 forecast, like I said, it seems though there's a lot of similarities that have continued to stack, but I think that we are in a position to see a rare alignment of expansionary fiscal policy with very dovish monetary policy. And the stage is already set for fiscal expansion via the One Big Beautiful Bill, a number of measures that are set to come online next year. But there's also the fact that Trump gets to handpick the next nominee for Fed chair. And at this point, he said that a willingness to cut rates is a litmus test for that next Fed chair position. So even if there is maybe some concern of inflation growing a little bit higher, I think we're still going to see the Fed lean into dovish monetary policy. I think we're still going to see the Fed lean into rate cuts until they absolutely cannot. And it's when inflation becomes a problem, like in 2022, that I think we could see a hindrance to stocks. Whether that happens this year or next, I'm still uncertain. I think the stakes for Trump are incredibly high because he's trying to grow the economy, prop the economy as much as he can ahead of midterms later in the year. If that falters, if we do see that inflation spike ahead of time, that could produce some adverse results. And then the final 2 years of his administration are going to be a lot more challenged with a divided Congress. So I think the focus right now, not just from Trump, but whomever he chooses as the next Fed chair, is going to be to prod growth as much as possible. And like I said, that produces a rare alignment of expansionary monetary and fiscal policy online at the same time, and I think that could push stocks up for quite a while longer. That said, I'm looking at working with the Nasdaq and the S&P a little bit differently. With the S&P, I'm more open to running momentum and breakout strategies, looking for 7,500 as my year-end target. The Nasdaq, want to look for pullbacks. I've identified a few different levels of support in the indices forecast for 2026. If you want the full report, you want the full strategy, you got to download the report. It's going to be in there in detail. Notably, in my 2025 forecast, it was the S3 level in the Nasdaq that called the low in April of last year. And since then, let's just pull up the chart. Again, this is the same level that I'd identified in that 2025 indices forecast. Notice that that's what helped set the low in April. And the Nasdaq 100 then went up another 58.27% from that low, from that rally. So I think there still could be some additional room in store. But like I said, if you want the full strategy, download the report. It's going to be included in there. Thank you for your time. As always, happy trading and happy 2026, ladies and gentlemen.